Rishi Sunak says the economy has turned the corner after inflation held steady at 4% in January. Experts had expected inflation to rise due to higher energy bills, but a fall in food prices for the first time in 2.5 years helped offset the costs.
There are now hopes that the Bank of England could start cutting interest rates earlier than expected. Labour, however, says millions of families are struggling and prices are still rising. Joining us now is Victoria Scholar, Head of Investment at Interactive Investor. Hi there, Victoria. With interest rates slowing, that still doesn't mean that prices are coming down. It just means they're going up more slowly than before. And we know how much people are struggling at the moment.
Yeah, that's right. The inflation rate looks at how much prices have changed over the last 12 months. But the cumulative inflation that we've seen since COVID has been much more dramatic. So even as the inflation rate comes down, families and individuals are still grappling with price pressures, whether that's in the supermarkets, filling up their tank with petrol, or paying rental costs. So inflation is still a problem, which is why interest rates have gone up a lot since December of 2021. And the Bank of England's in wait-and-see mode to decide when it can actually start cutting interest rates.
It's still double the 2% target, isn't it? So do you believe Rishi Sunak when he says the economy's turned the corner?
It's difficult. The last mile of getting inflation back down to that 2% target is going to be the most challenging. To put it into context, inflation has come down a lot. In October of 2022, it was at a 40-year high of 11.1%. We've been seeing it slowly ease. But for many at home, they won't be feeling that. They'll still be feeling the effects of those price increases because prices are a lot higher than where they were around the time of the pandemic, before the war in Ukraine that sent commodity prices sharply higher, before we had issues with food imports and poor harvests overseas, and other factors that have led to volatile prices around the world.
Well, exactly that, Victoria, because in fact, just this time yesterday, Nick and I were sitting here talking to an expert about the fact that there's going to be a tea shortage. And of course, the reason for that is because of the Red Sea, because of the Houthi attacks on those shipping containers. Now, of course, the knock-on of things like that, and we know it's not just tea, that's the busiest shipping lane pretty much in the world. Those ships will then have to go all around the Cape of Good Hope, around South Africa. So the products on those ships will be more expensive. So we've still got all these other headwinds that presumably are going to keep trying to push prices and inflation up.
Yeah, and I think that is one of the big unknowns when it comes to what happens to inflation in the months ahead. We've had many businesses already warn about the potential impact of the Red Sea attacks. Companies like IKEA and Tesco have talked about potential product shortages, potential delays, and even the possibility of price increases too. So that's why I think that the Bank of England is holding fire from cutting rates right now, even though, of course, that would give a boost to the economy and markets at a time when they need it. But it certainly doesn't want to start cutting rates too early and then fueling inflation unnecessarily.
And of course, today's figures weren't the only economic indicators that will have been in the Chancellor and Prime Minister's diary this week. We know we're going to get figures on how GDP is looking, how the economy as a general is looking, UK PLC. What are you expecting from that?
Well, it's going to be interesting to see whether we fell into a technical recession at the end of last year. But really, it doesn't matter that much whether we get a figure that's just above zero or just below zero. It's more about how people are feeling. And I think it's the pressures from inflation, from higher interest rates, and the broader cost of living crisis that makes a lot of people feel as though we're in a recession, whether or not we have actually reached that technical hurdle.
Just out of interest, Victoria, what is it that has brought the interest rates down? Is it the cheaper fuel prices coming through into the commodities?
So interest rates haven't come down yet, but inflation has stuck
forgive
at
me,
4%.
inflation rate. Sorry, there you go. Forgive me.
Yeah, so the inflation rate, we've seen upward contributions from higher gas and electricity charges, but those were actually offset by downward contributions from furniture and household goods and food and non-alcoholic drinks. So this time last year, energy prices were lower because of the energy price cap. Now that that's come off, we've had to see a lot of energy prices increase. But then in terms of a lot of retail items, we're in a pretty tough month month. We're talking about a tough month, January, after the festive cheer has ended, and that's when sales come in. So a lot of businesses are cutting their prices. Also in the supermarkets, they've been taking part in this fierce price war, competing with the likes of Aldi and Lidl, which are notoriously competitive on price. So we've been seeing supermarkets have to cut prices on essential items. So in terms of January's figures, there's been some upward contributions as well as some downward contributions that net have essentially led to no change, which is why the inflation rate remained at 4%, in line with what we saw in the previous month.
And Victoria, many economists who one speaks to will say actually the only thing that really matters, which is an indicator of whether, as a nation, as an economy, we're going to get ourselves out of doom and gloom and a slump, is confidence. And of course, that is something that's very, very difficult to measure. Either consumer confidence, or do people feel that things are getting better? Are they going to book a builder to do a new kitchen extension? Might they take a new hire lease out or on a car? All these things that will put some money into the economy. Are businesses confident? Do they feel that they're ready to buy a new piece of kit, a new piece of technology that might, therefore, that investment might lead to bigger sales in the future? Can you give us any indication of how confidence is looking?
Yeah, and I totally agree with you that a lot of it is about sentiment and confidence and how people are feeling, whether they're going to go out there and spend on those big ticket items, or businesses are going to go and invest in more projects and hire more staff. Now, I think one big potential tailwind to confidence is going to be the fact that economists and analysts are all expecting that the Bank of England is going to cut rates at some point this year. And of course, cheaper borrowing is extremely positive for businesses and consumers, can help fuel activity in the housing market. It can help fuel all sorts of other business activity as well. So I think the fact that this is on the horizon is helping to drive a pickup in confidence this year, because there's no doubt that we've been in a period of low confidence since the pandemic, and then the war in Ukraine, then the tensions in the Middle East. It's been a really tumultuous time, but it does feel as though this lifeline around the corner of potential easing in borrowing rates is helping to drive a slight pickup in business and consumer confidence.